Aloha and welcome to Java. This is Monday and it's for December 18th, 2023, last trading week prior to the Christmas holiday. So we start in with our risk indicator, still below the 250 levels, even though we are in high territory. It's very well managed at this moment and relatively stable. So the two main elements, the relative strength of the dollar and the 10-year yield, both retraced quite a bit, and that is helping with the rally in the stock markets that we're seeing. The prices going up are kind of in a relative area because the dollar is not worth as much, doesn't have that same purchasing power. You can't get as much for it as you used to. So with calendar, we are expecting at 10 a.m. Home Builder Confidence Index. Traders are still kind of rolling in from the weekend. So tomorrow morning, Tuesday, prior to market open, if you want to have your swing trades positioned, because we are expecting more home numbers prior to open, and we're going to get permits with building. So we've got the final Santa rally is basically kind of naming the sentiment here. Jerome Powell, when he came out and he was so dovish about it, everybody's pricing in that they're going to cut rates, and they're kind of going a little bit overboard. And so this is basically what they're saying. It's an ex-FDIC chair talking about the irrational exuberance. So just FOMO, everybody, again, as I was saying, on that one side of the boat. So that's usually a poor indicator. There's going to be a little bit of a correction that should be incoming here, at least a bit. Nothing goes straight in one direction. We are still clearly kind of bull target right now. So market's green, everything going up at the moment. But there will be a little bit of chop and correction before the end of the day. So we've got this story is talking about what we were talking about, the holiday debt when they were talking about Black Friday with huge numbers, and also Cyber Monday. They've got a report now coming out. We were already talking about this before they did this report. It's mostly fueled by the buy now, pay later, and then also with credit cards. But they did a study, and it's actually saying that there were $12.4 billion through these short-term loan companies. So this is more debt driven. They don't have the same, in general, they don't have the same percentages as credit card companies. However, this is a tremendous amount of debt. And what they're finding more and more is that younger people in particular just feel like they're going to spend this because they are never going to be able to pay it back, which is a very dangerous point of view. So we've got retirement security under threat. We were talking about this before, but now it is beginning to accelerate. People are raiding and taking from their 401ks and retirement plans. And while I can't really say that I argue with this, because I think that in general, retirement plans and 401ks are going to lose quite a bit of value coming up here sometime soon. I have no idea when. That they are kind of hitting these because they don't have other venues for money. So there's one other incoming here. Two more stories came out this morning. Housing market already starting to pick up now that mortgage rates are falling. And with this trickle down, they're saying that renters are finally catching a break because rents are seeing the biggest drop in 3 years. Well, the demand has gone down at the prices that they're hitting. So this is kind of in the manipulated markets that we have, this is one small section of how normal markets would work with the buyers and the sellers dictating the prices. However, what's going on here as well is now that these rates have dropped, people are now also hitting again home equity lines of credit and also loaning more against their home if they have any value left because they're kind of against a wall. I expect that to accelerate as well. And this was just the same thing that happened just prior to the financial crash happened in 07, 08, the housing bubble, 2005. Same thing happened. So we've got the World Bank also warning that we've got record debt levels threatening developing countries. So what do they mean by this? So the same thing as is going on in the United States as well as multiple countries around the world. When they did their holiday shopping in the US, they did this buy now, pay later, using credit cards, getting loans. Well, basically, developing nations, third world countries, can't get their infrastructure together. They created loans. The World Bank gave them loans to, well, for various reasons, and then also to get things such as clean water. And now they're raising rates on these third world countries, and they cannot service their debt. So this is an issue, and it's shoving them deeper into poverty. Same thing that it's going to do in the United States for basically the retail consumer. So just a short note on this one because it is large deal and it's everywhere. Japan's Nippon Steel is going to buy US Steel, $14.9 billion deal. So this is going to be huge. It was a Philadelphia based company. And it's basically, this is going to become part of all of the manufacturing that kind of got lost, but it will create a temporary boom for them. So, and then also US Steel, if you're trading in the stock, it's definitely going to be a mover today. So on with trade. So we've been talking about how the trade on these major, this is the Suez Canal. So over in the Middle East, of course, they bombed container ship. So all four major container ship companies for shipping have halted any of their activity in that area. So now they're sailing all the way around Africa. So we talked about this yesterday as well, and we've been talking about it for a while. This is going to slow down, cause supply disruptions, and just like we heard recently with the last lockdowns that happened, this is going to be inflationary in the long term, cause disruptions, and have issues. So just prepare for more of this incoming. And it is going to raise prices because it's taking them more fuel to get these goods transited to their destinations, basically. And that they're not going to eat the cost on that. They're going to pass that cost on. So going into a couple of lava updates, and again, artificial intelligence. So I want to bring up a couple of things that this is in regards to. The first one is that showing ChatGPT is showing geographic biases on environmental justice issues. So aside from this particular instance of an environmental justice issue, what's going on here is we're seeing the bias in general that can be programmed into these and some of the setbacks that are going in here. And this is exactly why I'm kind of advocating that there must be multiple people to program these and not just leave this up to the big four. Basically, we've got this Microsoft, Deep Ties, Amazon has their own, Google has Gemini. We've got Tesla is beginning to work on theirs. And basically, I think more competition is a little healthier to have few more views in here. But we've got amazing things coming. And then this is one other downside. We are in an election cycle, and they're already talking about unverified election claims from Microsoft's chatbot, igniting debate over its ability to preserve democracy. Well, this is Bill Gates, Microsoft. So they're going to have their views. And when these companies decide that they've got whatever their agenda, this is massive different form of lobbying. So they lobby all of the time, the politicians, but now they're kind of owning at a higher level because they're controlling what everybody sees, whether through social media, the ads that come up, the news that is shown to everybody, and they can control all of this to even higher degree. So this is going to be, needless to say, an extremely interesting election. I don't, honestly, and I might get roasted for this, I don't know that the vote counts like it used to. There's so much management, just like in the markets, going on with the elections, and both parties kind of representing the same thing. There's a lot of issues with this. And basically, in my opinion, the government has gotten too large. So, anyway, other than that, outside of my opinion, and you're welcome to have your own, feel free to comment. I appreciate you all being here. I wish you all a wonderful day, green day if you're trading. And until I see you again, my friends, stay free.